Good morning, afternoon, or perhaps evening, and welcome back to Lamb's Cryptoverse. Today I'm going to talk to you about Bitcoin sentiment. If you recall, it's been over a month now since I became bullish on Bitcoin and crypto and equities because a lot of these readings became bullish around early June, mid-June, and this includes equity data too, but I'm going to have another presentation for that. So there's a lot to talk about, so I'm going to speak quickly and trying to get a lot covered in. Let's go to the next slide. Well, there are different ways of reading sentiment. If you recall last time I talked a lot about the Crypto and Fear and Greed Index. This time around I'm adding yet another version of that from BTC tools. So we've got two versions of that. Then we've got social media, and that measures sentiment too, and put to call data and futures data. So let's talk about the one that's pretty well known. This is a company called Alternative, and they talk about the Crypto Fear Greed Index. And this went up from a very low point. If you look at the moving average, actually, in around mid-June, it was the lowest level that we've seen in history. So that's why I was so bullish on crypto, because of this index. This is one of my largest data points. I think at one point, this index hit like 6. I mean, it was that low. Now we're up to 45. So that's obviously neutral to greedy. So once again, these are contrarian indices. So when they reach this high of a level, you have to start being careful, especially if you're a risk-averse investor. You like to employ risk management techniques. This is a level where you start thinking, maybe I should take some chips off the table. Now let's get to the next one. This is one I just added. This is from BTC Tools, and it too became bullish. Guess when? Mid-June. But now it's becoming bearish again because the index moved up to over 60 at one point. And so that's becoming bearish from a contrarian point of view. And this index is similar to the previous one, but it's based more on social trends. You see, all these indices and indicators, they all use slightly different data sets to calculate their indexes, but basically they're telling you the same story. So next slide. This one here, it's not a fear greed index, but it's something similar. This is what's called social media buzz. And again, it gave a buy signal in mid-June. And now we've moved up towards neutral. So I wouldn't call this one bearish because it's got a lot more to go. But still, you can see that it's gone up quite a bit. Next slide. This one is, wow, this is where you've got to be like, whoa, maybe I should think about what I'm doing. This is the Altcoin Season Index. This had been a Bitcoin season for like almost a year. And it was basically a buy because when it's a Bitcoin season, that means investors are moving monies towards stable coins and Bitcoin, right? Bitcoin is almost like a safe haven asset if you're a crypto investor. But look where we've gone now. We've like shot up from a very low level up to nearly 100. Now we're at about 75. But this is still altcoin season. So this is one of the worst or bearish readings, most bearish readings I've seen. So here it's saying take some chips off the table. Many chips, actually. Next, we're going to talk about options activity. This one here is sourced from Deribit and Genesis, and it looks at implied volatilities. But it's not the VIX. This is implied volatility in the crypto market. And you can see I've got a little cloud there. It was bullish yes, once again, in June. It was bullish in June, and now we've gone down to neutral territory. Here's some more options information, but it's not on volatility. This one is specifically on Bitcoin and Ethereum put to call option activity. And this is one I really like to use. I like this one a lot. And in the equities market, it's been very reliable. So here, if you look at Bitcoin, that's the dark blue line, I suppose. It's gone down from about 0.7, 0.75 down to 0.6. And I would say that's neutral to bearish. But that's not what I want to focus on here. I did a separate presentation a week or two ago on Ethereum where I was really bearish, and you could see here why. Ethereum's put-to-call ratio has gone down from around 0.7 to the lowest on record. It's gone down to about 0.25. That means everyone is bullish on Ethereum. And if you look at the strike prices, you can see that too, or the maturities. Everything in the Ethereum options activity is saying that investors are bullish on Ethereum, and that's because of the merge coming up. The merge is expected to be completed in mid-September. So everyone's bullish. But again, remember, I interpret this from a contrarian point of view. So this data to me is very bearish. Next slide. This is futures positioning. This is what's called a perpetual funding rate. So if you recall, perpetual futures don't have a maturity on it. And this is the type of futures that investors like buying because they don't have to worry about rollover risk. And if you see the green bars there, that's the funding rate. When the bars are green, that means investors are becoming more bullish because they're paying the other side to take the other side of their positioning. So again, this is bearish. Futures positioning in terms of the futures curve appears bullish because it's in contango, but it's not really in contango. The problem here is the axis. The axis is really not drawn properly. It should be more like, it's saying it's between 25,000 and 25,300. It should be more like 22,026, because if they did that, they made a wider axis, you would see the futures curve is actually flat. So that's telling you that if futures investors, which tend to be better than equity retail investors, they're the better predictors, I should say. They're not predicting a big increase in Bitcoin, the Bitcoin futures market. So I interpret this as neutral at best. So let's summarize everything. What are the key takeaways? Crypto investors, including Bitcoin, but especially Ethereum, they've become very greedy. So that's bearish. Options activity, no matter how you look at it, whether it's a put-to-call ratio, implied volatility, skewness, which we didn't talk today, it's all very bearish. Futures positioning is neutral to bearish. And we didn't talk about equities positioning or equity investors. That's going to be in another presentation. But I'm going to give you a little trailer. Equity investors have become neutral to greedy. So that's also bearish. So altogether, I'm neutral to bearish. But I think this rally in both S&P 500 and in crypto can continue because it's a short covering rally. And those things are difficult to predict. So S&P right now is at 2,300. So maybe we go to 2,500. I don't know, not much more. And Bitcoin is about 24,000, 24,400. It hit 25,000 last night when I was sleeping. I don't know how much higher it could go. I don't think it could go too much higher. Maybe 28,000, 30,000. That's it. It's going to be very difficult for stock prices and crypto prices to go much higher based on fundamentals. But momentum can push up these prices temporarily. But I think if you're a good risk management, you'll be taking chips off the table. Well, thank you all for coming back to Lem's Cryptoverse, and please subscribe, and please look at our other videos that include equities and Bitcoin and derivatives, and we've got a lot of information out there. Thank you again. Bye-bye.